streaming.
Good afternoon, everyone. Welcome to the recap. I'm Evan Lazarus, CEO of T3 Live, and I am filling in for Scott on this Friday afternoon. And what a Friday afternoon to fill in. Market really a bloodbath the last two sessions. We can't say it was out of nowhere because then, effectively that would be a lie. There's been a lot of talk about failed breakouts and the action of the market. I'm going to dissect it a little bit. Again, I covered it in the morning call this morning, but we're going to go and review today's action and, think about how to position yourself for what to do next, which, I think is the most important way to think. If you didn't participate in this, very quick, very violent down move, that's okay. I know that, most people didn't really see it coming, especially the fact that most of it happened on a gap down yesterday, and a lot of times, as we've seen historically in the last couple of weeks, or I should say the last couple of months, a lot of gap downs have been opportunities to buy. Well, yesterday certainly was not the case. So let's take a look at what to do now and sort of what to think about going into the weekend so you can get your brain around how you want to approach next week. So let's jump over here into the charts. And what I want to do is I want to give you a quick overview of the S&P. We have the S&P 500 index here. And this morning I covered this, I spent most of the session covering this, and you can see, we sort of topped out in this area up here, and I'll zoom in a little bit, and that was right around 1980 in the S&Ps. I think the actual price high for the, that we saw was right around 1991. So, we spent about 5 weeks in this range. And you can see, this range clearly broken down, yesterday and today. Again, these are weekly bars. So we found some support at the 21 EMA here on the weekly, which, this weekly chart's been a great barometer for what this market's been doing since basically the beginning of January, January of 2013, we've been trending higher. Every pullback into this 21 EMA, as you can see, and I'll kind of mark them off here, here. All these opportunities, all these quick little pullbacks have been buying ops for the better part of the last, let's call it 18 months, plus. So, what do I think about what to do here? Well, I don't, it's hard for me to say, step in and buy this. It's probably not what I would do and not what I would say. I will say that, we still have rising averages, which is bullish, but at some point if the market's going to change its structure, it's probably going to do it, here and now. So why do I say that? Let me just kind of remove all these marks. Why do I say that? Well, I say that because, we have a little bit of a different, animal in here. And what I mean, by that is that you have some room. This is basically one giant pocket of air, to break down. You have this sort of open space, and the market doesn't really have a whole lot of support in it. This is a daily chart. I would say, until this 200 EMA, which probably coincides with, price support somewhere down, in this general vicinity. And you could see multiple touches along this area. So I think that's probably where this market will, eventually get to. Now, is it going to happen in, the next 2 days? No, probably not. My best guess here would be, we saw this very quick break, on the short term. Again, we talk about these 8 and 21. You can see, again, just like the weekly, you had steady rising averages up until you don't. So now something clearly has changed. I think, Monday, Tuesday, Wednesday are going to be fairly choppy. If I'm sticking my neck out there and making some sort of short-term, best guess, I would say you're probably, we may see some retracement. You may see some, 2 or 3 days of upside action. Although I will tell you it'll probably be very choppy intraday. They may be marked by gap ups. But nevertheless, you might see some sort of, test back into this 1950 to 1960 area before we can definitively say, look, this is an opportunity to either get short or, reevaluate. So to me, this marks that we've seen possibly a short-term low for the next couple of sessions, and you really need to evaluate this data as it develops over the next couple of days. Like I said, the next couple of trading sessions could be very choppy. They could provide for opportunity. As a trader or as a former trader, I would say, think about where relative strength is. Stocks that are, showing decent strength in a market, eBay, to me, one of those trades that, hung in there for the better part of that, violent pullback. Our stalwart Apple holding this trend line, from this gap up in late April, holding this trend line pretty good, as of right now. So stocks, we saw a little bit of a pullback, but nothing really quite like what you saw in the broader indexes. So keep an eye on some of those. Some other names that I've been watching personally that are also listed in off the charts. Delta, DAL, broke its short-term, rising bounce here. We have this listed as a short in our off the charts, so we're going to keep an eye on that one. A couple, more high beta names. Netflix today, broke down, yesterday, bouncing back today. Saw as low as really 412 before snapping back and closing relatively strong intraday. You can see that large price decline followed by that snapback. So, a couple of trades that I think are worth watching here. Netflix is, a little interesting in the sense that it's under its 8 and under its 21 now. So, I don't suspect you're going to see that up and away type trade that you once saw there. So, keep an eye on that one. CMG, another one, still in its rising channel. Still, again, relative to the market weakness, holding itself in there. I would watch for any break of this lower trend line, but at this point, that quite hasn't happened. Tesla, another one on the heels of earnings. Again, a fairly wild session for this one. I know pre-market was down somewhere. I think I saw it trade around maybe 215 or something, and then came all the way back and opened up and traded higher. So Tesla definitely one that you want to keep an eye on here. Is it building some sort of pattern here, where you have this sort of rounding under type pattern, and we get another move higher, or is this just some sort of flag pattern that it's building, obviously tailing down here, in today's session. So again, it's hard for me to go out there and make these bold predictions, but I don't think you have to in this market, because ultimately, with a break like this, again, this is back to the SPY. With a break like this, you're going to know in a matter of a week or two, what the path of least resistance will be. So it's not like you have to just try to trade every move. Like I said this morning in the morning call, cash is a position, and this market, while going back to a weekly, has been let's say a pretty strong bull market into all-time highs off of panic lows of '09. The market is potentially setting up for lower prices. Again, I'm not trying to say doomsday, and I'm not saying the end of the world, but what I am saying is you got to approach this with some level of objectivity and flexibility. Just because we've gone up for the last 6 months doesn't mean we will continue to go up, and if we do, the rate of which we've been rising may start to slow down. So we might start to see more of a choppy sideways basing pattern for the better part of the next 6 months. We really don't have that crystal ball. But again, if I'm looking at this from a pattern perspective, since the middle of 2013, let's call this our intermediate term trend, a nice tight ascending channel that the market's been in for about a year. Could we come a little lower and test this lower trend line, 188 SPY or 187? We could, and then we could snap back and again make a new high. But we have to evaluate the price action as we get to those areas, and moreover, you have to understand what the market's trying to tell you overall. I personally am in the camp that I think we see a pullback at a very minimum, probably into this area down here, which is this 175, SPY 174 to 175, plus or minus, I think we'll probably test down here, like I said, not in a matter of 2 days, but in a matter of several, most likely what will be several weeks. And if that's the case, the market will be, there will be opportunity to either exit your longs or initiate some short trades, or start to tactically approach the market with a shorter term time frame with smaller opportunities. So no matter which way you slice it, don't get yourself frazzled. Pull back your risk. Evaluate in the days to come. It should help you objectively make those decisions, for what to do going forward. If in the event you decide, and I tell this to students at T3 Live all the time, you don't really have a handle on what's going on, you don't feel like opportunity is in your favor, you're not comfortable on the short side, whatever it may be, make sure that you understand, who you are and what your approach is, and don't try to force that, force a trade if a trade is not there. Trying to catch a falling knife, like I said this morning, is a really, really tough and can be a very costly trade. Evaluate your data as it presents itself, and ultimately, like I said, the situation will become a little more, transparent on the best risk-reward scenario. So as always, a plan trader is a profitable trader. I hope you have a great weekend, and we'll be back next week to follow up on what was a very interesting week here in the market. As always, take care.